Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Welcome back to the stock markets. Hopefully, everybody had a great weekend. Now, today we had a quieter day on Wall Street. We did have the semis pushing higher. We had a couple big movers with Tesla and SMCI with some larger tech plays. However, mostly everything is sitting on the sidelines waiting. We got the FOMC meeting this Wednesday in the afternoon. So we should have some volatility there. But plus, we've got earnings this week, and we're going to jump into some earnings for tomorrow morning later in the show. But let's jump into the market summary board to get an idea as to where the market's going today. So you see here, we've got the Dow Jones down 0.16%, NASDAQ up 0.17%, S&P 500 now down 0.09%, basically flat. U.S. oil did pop, jumped 3.19%. Gold is down 0.56%, and Bitcoin is down 1.27%. It's been fluctuating a lot over the weekend. Did get up near that $120,000 mark, but is now down underneath comfortably. All right, so let's jump into the heat map, the S&P 500. What we would expect on a moderately flat day is a lot of greens and reds, and we're seeing that, but we do have some reds in concentrated sectors with the health technology, the finance, the consumer non-durables, utilities, process industries, transportation, communication, all dominantly red. But as I highlighted, we do have Tesla poking up nicely, 3.11%. Some of the bigger plays with AVGO up 1.47%, NVIDIA up 1.76%. And then we have Microsoft and Google down slightly, Meta up 0.59%, Netflix down about 0.5%. So we do have a mixed bag. Coinbase, though, down 3%. Decent fall there on Coinbase. So let's jump into the S&P 500. And guys, we've been talking about this for a while, how the markets are extended, they're overbought, they need to pull back, and we're just not really getting it. We're getting this gradual float higher. So let's do this. Let's erase these trend lines right here, and let's just purely focus on what's going on with this parallel channel. And I'll get rid of the RSI too. RSI obviously showing we're in overbought territory, but that doesn't mean we can't keep going higher. So let's just focus on this. And we notice here this inclining parallel channel. We have broken to the downside, and now we fought all the way back up, and we are so very close to tagging that area. This area should be resistant, but considering the gradual float that we've had in the markets, we could easily just continue moving higher. And you might say, Drew, what do you mean? I thought you were talking about we should have some sort of correction, and we really should. We should have a pullback about 2 to 5%, because literally, look at this chart, extended move. It's a great move up higher on the charts. But one thing that I noticed over the weekend, as well as today, I was talking with Dr. B on the live day trading room. And if you scroll back over here to 1998, we had a very similar dip. And it's even going to be hard to see here on the screen. But if I zoom in right here, you can see here on 1998, right here, we had a dip of about 30%. All right. So this dip down here, 22%. So excuse me, we had a fall of 22%. We then had price recover. And if I zoom in, you can see we staggered just a little bit right here at the pivot, which is what I was expecting us to do here currently, but we haven't done that. We haven't had any little pullbacks right around the retesting of the previous highs. And if you see here in 98, we continued moving higher from this low all the way up to the dot-com bubble burst. We moved up about 68% to do so. So then let's fast forward to today. So current market conditions from February, we dropped about 20%. So this is almost like 1998, guys. And then we moved up. We didn't really pause here, which made me believe like the more we pushed higher, the better of a pullback we would have. But we just simply haven't had that yet. So is this the new AI bubble that's going to be pushing us this fall higher up on the charts, just almost melting upwards, just like a slight float moving up? That's something I'm going to be monitoring closely, but ultimately in the very near term, we are going to be watching this parallel. How does price interact? Do we break in and confirm? Do we poke in and then start selling off? That's going to be something that I'm going to be paying close attention to, because with an overbought market, we could be due for a simple technical correction, like I said, 2 to 5% at any given moment, especially when we're running into resistance as we see here on the SPX. Next up, we've got the Qs. The Qs here, as you see, are pushing up higher, now confirming above this top end trend line. So the Qs really have had a great push, and it looks like it's going to continue to march up that way as well. Again, overbought, but we've been overbought for several weeks now. And so that's really nothing new on the charts. It's still continuing to grind upwards. Now, of course, too, and one thing I didn't even mention, folks, we had the big deal with the European Union. This is going to be potentially really big and could be a reason why the markets float up through September. The European Union agreed to purchase $750 billion worth of energy from the United States moving forward. Well, each year, the European Union has been spending $250 billion purchasing that energy from Russia. So now what is that going to do to Russia? Is that going to now put pressure on Russia to end this war with Ukraine? They have a new deadline coming up in September. If they do end this war, I imagine the markets could continue to push higher. So an end could be potentially on the horizon, especially with that news that would likely be putting more pressure on the economy in Russia. Not to mention any further sanctions that would be put on during that time frame too. So now the clock's ticking for a potential decision to be made. All right, guys, so let's jump into the next chart. Let's get into the SMH. SMH, as you see here, we got a daily topping tail, not the biggest of ones, but ultimately we've started to push back into this inclining parallel channel. Do we confirm tomorrow? If we do, the probability shift for more upside on the charts of the SMH. Got to pay attention to SMH. That was the leader today, up 1.36%. That's where the rest of the market's going to follow. So I'm paying attention to this if we confirm tomorrow. Next up, we got IWM. IWM did have a down day, but it's still mainly just consolidating right here. If I flip to the weekly chart, you can see we're just right here, all within this range here on the weekly time frame. Still, all in all, it's a great chart. It looks like IWM could pull back to this trend line right around 220, but next resistance moving higher is at 229.30. Next up, Bitcoin. Bitcoin here really hasn't changed from last week. We did poke up, like I said, right around the 120 mark, but then since got rejected and came right back down. Ultimately, this is all consolidation coming off of a daily topping tail that should imply further downside to this trend line right around 113. $113,641. Next up, gold. Gold did fall down ever so slightly today. As you see here on the charts, we did get rejected by this declining trend line and are making our way down here to this inclining trend line, which would be support on this current trajectory. That will be around 32.68 on the chart. Ultimately, price still contains within this wedge. Now let's check out U.S. oil. U.S. oil, as I said, did poke up very nicely today, up 3%. That still doesn't change this pattern, folks. This is still a bear flag on the charts with ultimate target down here around $60 should that play out. Next up, silver did pull back on Friday and really just chopped sideways today. To be expected after a monumental move up to this trend line, which is resistance. Be watching support areas at 36.58, followed by 34.86 for potential buying opportunities for another reattack of that inclining trend line. Next up, nat gas. Nat gas also still chopping around this area. If you notice, today we did not close underneath this red candle on July 23rd. That makes all of this move down, bearish consolidation, pointing towards further downside. Little speed bump of support will occur here at $3. Major target, though, is going to be all the way down here at $255 if this matures out just a few more days of consolidation. Next up, the DXY. Look at that great pop here on the DXY. That's the opposite for the euro US dollar. The euro's taking a little bit of a hit, and the dollar is marching upwards that we see here on the chart. Nice move here on the dollar on the DXY. Notice I've got this trend line drawn right here, this declining trend line. That is the neckline for an inverse head and shoulders pattern, which would take the DXY up here to 101.41 on the screen. Be watching for that. That could put pressure on cryptocurrencies. It could put pressure on gold, and it would be minor pressure. You got to think about it. When the dollar increases in value, it's going to make other items cheaper, especially things like gold, commodities like that, potentially Bitcoin and cryptocurrencies too, as well as the stock market. So if we start ripping higher on the dollar, that actually could put some pressure on the markets. Now into some bigger movers on the day. We do have SMCI, as you see here, pushing up nicely, up 10.24% to close the day. Very nice move for it, closing to $60.05, right on the top half of this 50% area of the parallel channel. Perfect move. If you notice here, I've had this measured move on my screen for quite a while. That was derived from this bull flag pattern telling me price was likely going to push up to 55.92. And today, not only did it do that, it exceeded and pushed through to the next resistance area, which is, as I've said, this 50% area of the parallel. Resistance beyond that is going to be here at 62.01. And then the most recent pivot here at $66.44. Those could be good day trading opportunities over the couple days ahead. As long as we do get some rapid movement up into those levels, I would be looking to capitalize on a day trade there. Next up, Tesla. Tesla here, we did have news over the last couple of weeks. When do we not have news in Tesla, basically? So Tesla, as you see, the last couple of days has been pushing up here on the charts and is still contained in this wedge pattern. We've got ultimate resistance right here at 340. Now this area it's been tagged 1, 2, 3. This will be the 4th time going, which is going to weaken that trend line, allowing for a chance for it to break higher. The same is true on the move to the downside. We've already tagged this 3 times, so that we could break on either end. It's really a 50-50 play on which way Tesla is going to break. Resistance to the upside, 383.76. Support to the downside will be this inclining trend line right around 286.59. Next up, we've got some earning plays for the rest of the stocks we're going to be going over. These stocks do have earnings being released tomorrow morning before the market opens. All right, so UNH. Now, we do remember UNH did get pounded recently. Look at that massive drop UNH has, and it had a great daily bottoming tail here on the chart. Still has held that bottoming tail area, all right? So the 50% area retrace to that daily bottoming tail is right up here. It's 262.76. It's about $20 lower. That would be my first area of support, followed by this 238.22. If you wanted to DCA in dollar cost average into a position, that's what I would recommend. 262.76, then 238.22. To the upside, we've got a declining trend line that will be the first resistance. That area is going to be 344.65. So we've got price bookend there for price movement early in the morning if you want to take advantage of some potential trading opportunities on UANH. Next up, PayPal. Now, PayPal, as you see here, a little bit different of a chart. We're moving up on this chart, not entirely overbought, but it's not like UNH where we're down there near the lower end of most recent trading activity. PayPal, as you see here, has been trading predominantly in a parallel channel moving higher. We've had some areas where we poked below as well as above. However, the next area of resistance will be that inclining trend line tomorrow morning at $81.84. Should we get really good news and earnings reports tomorrow for PayPal, we could push as high as this gap window located right over here from price action on February 3rd of this year. So the areas to the upside, gap window $86, as well as $81.84 right here on this inclining trend line. To the downside, we've got initial support at $73.92, followed by $70.47. I doubt price movement would get all the way to the bottom end of this trend line, but should it do that, we're looking at $66.38. Next up, Boeing. Now, Boeing's been moving much higher on the charts. We've been having a lot of deals for Boeing as far as other countries making purchases of these airplanes and stocking up their fleet. So we've had nice price action moving higher. Matter of fact, if you look too, we have this longer term declining trend line that price has now broken above, all right? So with the break above of this declining trend line, we typically like to see price retreat back to the trend line and then that creates a buying opportunity for everybody to go ahead and go long on Boeing from this breakout play. Support for that pullback is going to be 214.57, followed by the declining trend line at 209.02. Resistance on the way up is 250, followed by 267.51. But considering this stock is really bubbling up in overbought territory in the near term, I'm favoring a little bit more of a pullback down here, which would be a great buying opportunity to move higher on the charts of Boeing. Next up, P&G. Now, P&G, Procter & Gamble, does report earnings tomorrow morning. If we see here, too, we're not near any near-term highs here on P&G. We've been trending downward, and you can notice that through this declining wedge pattern displayed here on the charts. So P&G has since bounced up from the bottom into that portion. So it kind of puts it at a 50-50 spot where it's going to go on earnings. If it goes up, I expect the first area of resistance is going to be this inclining parallel channel right at 162.82, followed by this declining trend line, which would have stronger resistance for an intraday move right here at 164.77. To the move to the downside, this declining trend line will be roughly at 151.05. And if we get a pierce of that, 147.86 and 144.43 are the very next support levels. But considering this trend moving down for PNG and declining wedges usually result in a break higher. Timing your entry on PNG could be a great opportunity to go long at, say, one of these support levels for another attack up to move into that inclining parallel channel. Next up, we've got UPS. Now, UPS, as you see here, has basically been creating a bear flag on the charts, right? We've had a movement straight down and then sideways consolidation ever since April lows right here. Really hasn't been ripping up on the charts like we've seen a lot of other companies after the April lows. So now with price still in this bear flag formation, you can even see it on the weekly time frame. That formation typically favors more downside, but considering how far we come off the top, we may be due for a decent bounce. Any good news on UPS would likely start pushing price higher on the chart. So this one still is about a 50-50 coin flip as to which way it's going to go, but at least for resistance moving higher, 109.40, and it would be a big deal for UPS to get above this inclining trend line. This is a very long-term inclining trend line that you see we have not yet confirmed back above. So a move up here would likely mean UPS is going to stay above this trend line for an extended period of time. So be watching for that. If we do sell off, $82 is going to be the next significant level of support on UPS for a swing trade. Next up, and finally, we've got SoFi, SOFI, due to report earnings tomorrow morning. Like this stock, though, overbought in the near term, which likely implies a little downside, even if earnings is great. It might be a sell the news type of event. So watch first support at 1924, followed by 1734. One thing to also notice, though, even though we're overbought, look, we've broken out of this trend line and confirmed above. Not only have we confirmed, we've retested and remained above. So this area, even though I'm favoring slight downside because of our overbought near-term situation, this area is respecting price and is holding price above. So you've always got to consider, if you're wrong, where's price going to go? Next stop, if it goes straight up, is $25 on the chart. You can see where I got this longer term trend line back from July of 2023. So this is a significant breakout for SoFi. But normally, just like I've been saying on the silver chart or on the wedge patterns, this is a different type of break up with an inclining trend line. Those typically fail. So we'll see what happens for SoFi. Regardless, it's been a great momentum move for it in the near to midterm. All right, guys, that's a lot of info, a lot of numbers, a lot of levels, a lot of information for earnings tomorrow for you guys to have great probabilities on taking these trades. Again, my name is Drew Dosek. Thanks so much for tuning in. Don't forget to like and subscribe to follow for some more trading setups. I look forward to giving those to you later this week. Until then, I see you on the charts. Take care.